So I'm Dave Black. I'm the head of Value Risk Advisory at JLL. My role is I manage the results and form the strategy for our valuation and tax business. I'm also responsible for delivering a lot of the values for our larger properties and portfolios that we value across the country, and as well help some of our large institutional clients find global valuation solutions across the JLL network. It's a complicated question. The investment market right now is complicated. Properties, industrial office have been moving up, or industrial and multifamily have been moving up, office down, retail has seen a resurgence. And what we're trying to embed in our values now is what does some of this sustainability investment mean from a financial outcome perspective. So we are looking at the dollars that our clients are spending to green real estate and better understand what it means from a financial perspective and what it might mean to the values that we're relaying to our clients. So it all comes back to the data on, again, what is those dollars, what does it mean to operating costs, what does it mean to capital costs, how is it changing the financial performance of the buildings that we're valuing. And so that is an ongoing process to try and get some standardization. But the vast majority, at least, of our clients are very much hoping that we will better embed ESG into our valuations moving forward. Again, a challenging question. It's very much a priority, and particularly with large pension funds and REITs and third-party asset managers that have ESG mandates and goals that they like to hit. It's something that we are qualitatively incorporating into our valuations, so asking a lot more in terms of the sustainability features for any building that we're valuing. But what we're really trying to understand, and particularly how it affects market value, is what is the quantitative side of this. So the money that's spent, how is that changing the building? We value so much in a forward-looking basis. What does the property operate like over the next decade? And so how it's influencing value is very building by building. There's also a lot of certifications out there, and there's a lot of inconsistency on what it might mean from a value perspective. But it's very much a topic that's in demand, and something that I think will continue to evolve in this next investment cycle. I think that the values, and my belief is that the values incorporate a green premium and brown discount right now. I think that if we as a valuation community are properly understanding the transactions that are occurring in the market, there are some motivations and inherent value influences that we're applying to our own valuations. But understanding what that exact premium is or what the inherent discount is, that's what's difficult. That's what some of our clients are asking us to answer. I don't know if we'll ever get there, but it's very much something that we are doing our best to understand what's driving the market. As a valuation community, we're not supposed to lead the market, we're supposed to reflect what's happening. And JLL has a few investor surveys on a global basis that have said, more than 75% of buyers have ESG affecting their buy decision. So they either increased a bid, decreased a bid, or didn't bid on an asset because of the sustainability features of that building. So seeing that happening in the market is something that, as a observer and reflector of the market, something that we need to incorporate. And again, I think will continue to evolve in the coming years. There's a lot of capital as it relates to decarbonization. There's a lot of money going out the door, and we know that right now there is so much focus on returns. It has been a challenging few years from a commercial real estate perspective. And so we aren't seeing as much dollars being allocated to the sustainability side right now. I think just as these assets stabilize, we would like to see, I think our owners want to just understand values. Is this the end? Are we going to see some trajectory upward? And is there some kind of wiggle room where we can embed some capital spend? It's still very much a priority. 2030 is coming fast, 2050 is coming fast, and a lot of our clients are trying to decarbonize. And just, again, how it influences value, you need to see a return. And that's the challenge of a lot of us, is understanding if we spend this money, what might it mean to value? And that's something that we continue to try and understand. We try to look to the market to provide some evidence on if or how much of a premium, or how much more desire is there to invest in a building that has already undertaken these capital improvements. But again, with the last few years being as dynamic as they've been, it's tough to really isolate one factor with everything else that's going on. But my hope is, as things start to stabilize a wee bit and we're kind of being a bit more positive and optimistic on 2026 and beyond, that the sustainability and ESG criteria will kind of creep back into the decision making, and we'll get some clear results in terms of what it means to value. We talk about the availability of data, the reliability of data, the transferability of data. It all comes back to the money being spent. How is it changing the buildings? What are the financial outcomes that are resulting from this spend? That's how we'll get better, when we can understand, with this type of building system, or with emission levels decreasing, or look at the leasing velocity within this type of building. All of the kind of questions right now is that we're starving for a comprehensive data set. And so to better prioritize, to kind of help us understand everything as it relates to sustainability, it's going to be trying to have some sort of unified data strategy where owners have this data at their fingertips. They can relay it to advisors like their valuers. And again, we know what it means from a number perspective. And that's what I'm hoping we're looking towards in the next few years.